a quick moment before I jump into my weekly video. Toronto has been buried in record-breaking snow, and I love the photos and the videos that people have been sending me saying, look what you're missing, Michelle, so thank you. And don't be fooled, even Mexico, the temperature has dropped a little bit. That's why I'm in my sweater. It's not the boots and shovel kind of cold, but even as I'm doing this walk and talk video, it's actually starting to rain. So let's get to it. Tomorrow, the Bank of Canada will announce its latest rate decision. And I want to talk to you today, not tomorrow, because I'm not here to follow the herd, as you know, or repeat headlines to tell you that nothing has changed, because that's what's going to happen. So, you're still feeling like life is getting harder every single month, likely. And while you're being told that the economy is quote unquote resilient, you're not imagining it. Resilience at the system level actually means that households are absorbing the pressure. And we've talked about this. Higher costs, higher insurance, higher taxes, and higher borrowing costs. All the while being told to stay calm. Tomorrow's announcement, it matters. But what matters more is what's already happening underneath it. By the time the Bank of Canada announcement happens, banks, lenders, and markets, they've already positioned themselves. Rate announcements don't usually start trends. They confirm them, and that distinction matters. This is especially important if your mortgage is renewing this year or next year. Waiting for your lender's renewal, which often arrives only 30 days before renewal, will leave you with fewer options, not more. And waiting for headlines is definitely not a strategy. And so why I like to talk to clients before announcements is for preparation. Preparation happens in advance. Protection happens in advance. And clarity happens in advance. And often I tell people to start these conversations up to 9 months before a mortgage maturity, because that's when we can draw some lines in the sand and really pay attention to what's unfolding. I've been in the mortgage business for over 27 years, and my practice, as many of you know, has been by referral only, which means it's built on trust, not urgency, not hype, and definitely not pressure. And I've seen multiple rate cycles, multiple governments, and multiple versions of this time it's different. But tomorrow, there's going to be a lot of noise. Your social media will likely be jammed with no rate change, no rate change. So today I want to focus on understanding your position, your timing, and your options, especially if your maturity is coming up, your renewals are coming up. But even if it's not, and you're thinking about buying or buying and selling, these are important conversations to have in advance. There's opportunities ahead, and preparation is always, always key. So if this kind of plain English context is helpful to you, then please like and subscribe. It really does help support the channel, and I'm trying to get the word out there as much as possible. And yeah, that's pretty much it for today. Have yourselves a great week, and until next week, be well.